Okay, welcome to CFD Trader's Edge chart wrap. I haven't done a video for some time, unfortunately. I just don't seem to find the time to do them. I really wanted to do one every couple of days, but I'm trying pretty hard to have a life outside trading as well, and I'm just not finding the time. So what I've decided to do is commit to a video every weekend, and at least that way I know it's going to happen, and hopefully you guys will know it's going to be there. So alright, let's get straight into it. I'm just going to ramble on about a few charts and a few observations. Nothing too planned, so we'll see how we go. Quick look at the S&P 500. It's amazing how these bottoms creep up on you, and before you actually realise there's a bottom in sometimes, we're almost looking at a potential top again. So in the last 4 sessions, S&P's bounced pretty substantially off that low. That swing day is looking pretty obvious in hindsight now, but the problem is we're coming up here around this potential res at 1335 odd. So probably the key for me tonight will be whether it smashes through there and can hold above it, or whether it's just going to smash through and turn out to be a false break. Those of you that know me pretty well know I'm pretty much not into predictions. I don't really care what anything's going to do overnight. And actually try pretty hard not to form an opinion, because it tends to cloud my trading judgment. I'd much rather just follow the price action and not have my own real set opinion of which way things are going to go. So yep, we might break that resistance and power on, and who knows, might end up testing some of these highs, or at least maybe a 50% range fib between these highs here and the lows. Let's see if I can pull those on there just quickly. And we'll whack that there to there, see if the fibs give us any ideas. We're around 38 now. 50's up around 1340. Interestingly, the 62 there is around that previous support, so that's 1360 odd. So there's a couple of figures that may come into play, but like I said, who knows. I'll just continue to trade the action as I see it. Right, we might as well have a look at the XJO to get rid of that one first. Okay, there's the XJO. Obviously not nearly as much bounce with ours, and pretty much a almost potential triple top here. We've struggled to break 41.22, 41.18, 41.18, 41.21. So around that 41.21, 22 area is where we've really hit the wall at the moment. You would imagine if the US can hold some gains tonight after a strong day on Friday, we're going to at least gap up. But whether that gap, again similar to the S&P, is going to be a good potential entry, or just a nice place to lock in some long profits, is yet to be seen. Obviously we'd like to see that resistance broken and then retested and held on any retest, but we'll see how we go. Let's have a quick look at the hourly on that, see if we can get any further signs. Pretty much almost a week and a half of sideways action, really. Got a nice sideways range here. We've broken through the bottom of it once, but that's pretty much it. So even index trading, there'd be some, there's some nice little range trades in this area until we break, but chances are we're going to match up here somewhere if US behaves, and that'll make it a little difficult to know what to do next. So I'll just sit on the sidelines and wait for a more definite signal to decide whether to be long or short heavy over the next few days, and even that could change fairly quickly. Right, I'm going to have a look at a couple of oversold plays, do a potential little bit of bottom picking. Okay, the first one's breaking. We'll go to an end of day chart first. There's the end of day chart, obviously slaughtered since their earnings guidance on the 20th of April. Was around the $8 mark, or almost $9 before then, $8.70, something like that, and it's been absolutely brutally sold off since. Hit a low here 3 days ago of 533, and it's stabilized a little. A lot of change of substantial shareholding notices coming through from Fidelity, so it looks like they have a lot to do with a lot of this this weakness. So when it's one seller like that, it gets me particularly interested in looking for the bounce when they're running out. Judging by their most recent shareholding notice, I reckon they'd be down to probably 4 or 5 million shares, and possibly at that level where they won't even be coming up as a substantial shareholder anymore. So now we just start looking for signs that they are done. If we have a look at an hourly chart, there's been a couple of decent sized crosses come through, which to me does make me tend to think that they're feeding these shares off, particularly on Thursday at 3 million. And interestingly, since that 3 million cross, sideways action. So as you can see there, we're pretty much sideways since that sell-off. I watched this one pretty closely during the day, and there's certainly still bot action on the sell side keeping this down, but this consolidation period definitely gets me interested here. If you were looking for an entry, you'd obviously look for a break of this range here. So 555 odd, it tends to look like the first potential entry. 557, it's also hit as well. And then you can set your stops for dropping out of this little range as well. So and position size accordingly. So we could throw some fibs on that, I suppose, to look for some potential areas of bounce. Now we could run it from any number of places, but let's run from the top of this little gap here for a start. I tend to find the little dips tend to give you a bit of an idea. And interesting with that, the 38 basically is right at this first gap fill. 584 is a gap fill. If we do get a run here, you'd have to think that's the first target. Interestingly, the 50 sits also where there was a little bit of consolidation here around that even dollar mark at $6. So 584 and $6 would certainly be my first two potential targets. And again, it seems to have respected fibs relatively well, because there's the 620 odd mark is where there's the more previous levels of consolidation. So for a short couple of day scalp, if it does tend to grow some legs there, that 584-ish and $6 should be my first two areas. Given an entry of around 555 or so, if that's where you did get in, 560, plenty of upside to upside potential compared to where your stop would be, which could be just below here. If you're super tight, it could actually be under the 545, something like that. So there's plenty of risk reward there. Yeah, but obviously do not take that as financial advice. It's just my observations of how I'd look at trading something like that. Another one we could look at is Qantas, which again has been savaged after its profit update on Monday, I think it was. There it is there, 5th of June, Tuesday I think it was. So we have a quick look at the end of day. You can see 1, 2, 3, 4 days of fairly solid downward movement with a volume increasing on each day. So I'm starting to think 4 days down, volume increasing, we may be getting close to a climatic bottom there. That's a 15-minute chart. Just a series of lower highs and lower lows, so certainly no downtrend broken yet, but I'd be looking for a semblance of a series of a couple of possible higher lows to look to get interested in having a crack at this one. Now it may gap up again if we're strong. If overnight markets are strong again, we might get a gap that will make it a little more difficult to trade. But if there is any more weakness, I'd like to see this volume start to dry out, and then a couple of higher lows popping in, which might give me a signal for an entry. I do tend to, if I'm picking these bottoms, and I know all the books will tell you not to, smelly fingers, blah blah. If I do take an entry, I may actually spread my entry over 2 or 3 positions and give myself room that I haven't picked the exact bottom and average down to the average to the price and position size that I want. But I'm very careful about how I do these, and I know where I need to be out to sustain a loss that I'm willing to take. So it's not for everyone, but I do particularly like these swing trades off oversold stocks, and obviously they're not going to last long as a rule, but they can be quite lucrative if you get them right, but you must show very strong discipline if you're going to take them. I'll just run some fibs on this from the high of that gap after the dump, just to give an idea of where we might see some levels. And as you can see, that 38 to 62 pretty well slots in with this previous sideways movement from Wednesday and Thursday. So if we do get a bounce, that 50 line would probably be where I'd be looking for some resistance on the way back. So if I could get an entry around the dollar and trade that up to around the $1.10 mark, all going well, that'd be a great trade. There's a 10% trade, but again, I'll certainly be keeping the losses very, very tight if it goes against me. Okay, what else can we look at? SYR, I thought I'd have a look at. It's one of the more day traded stocks around at the moment. And why not when it's gone from 20 odd cents to $3 in a few months? Obviously it's fallen from grace in the last few sessions, which of course you'd expect it would. It was never going to keep going vertically like that. But is there a bounce trade in it? Hit $3, dumped all the way down to $1.95 odd. It's had a bounce and a lower high, and it's dipped again, quite a tail on Friday. And interestingly, the volume's now starting to dry right off. So again, let's whack a few fibs on this. So I'll go from that one there to there. And as far as looking for that bounce, look at that, it bounced almost exactly to the 50 on the way back up. So yeah, certainly with these Fibonacci's, or with any indicators for that matter, I don't believe the indicator works. I believe it works because there's so many other people looking at them, and so they become self-fulfilling. I don't think there's some kind of magic formula that's going to tell you what stocks are going to do. But enough people look at them, then they then become worth keeping an eye on. Alright, so let's get rid of that, and maybe we'll pull this down to a 15-minute weekly or something like that, and we'll maybe run the fibs of that little range there just to see if we can get an idea of where we might find some resistance if it does continue to bounce from there. 50 this time's up around the 226. We're not 226. You might want to look up to that 230. So first targets, there's not an awful lot in that swing trade. So whether I'd look to take that or not, I don't know. But if the volume starts to kick in, and it looks like the people who've missed out on previous runs of this thing want to get on board, then I may give that a ride. And that's what tends to happen with these things. Everyone else has seen this thing move, it dips, they want in on the next one, on the next potential run. Greed kicks in, they want a piece of it, and that's what tends to give you these little rides. Now whether it's only going to be to that previous high or less, or whether they'll actually grow some, whether it'll actually get some power and kick past that res there and kick on, who knows. But it's on the radar at least. Let's do one more. I've been rambling on for 13 minutes or something. What have we got? Let's have a look at EHL. What interests me about EHL is I think it had a profit upgrade or something somewhere around here, so if I can find it. Confirmed guidance on the 25th of May, which they didn't really like that very much, but even though it did confirm guidance. It's not in the news here, but around here there was a couple of upgrades by instos to buy. I think it actually got a strong buy from Goldman Sachs, so I think that's when this green candle kicked in here. So the instos have put out a buy to their clients. As you can see, it's had a nice 3-day run, dipped back down with market weakness onto this trend line, which is quite encouraging. It's had another bounce, but has failed to kick through, but it has respected this trend line. So let's go to an hourly. Okay, so it's respecting this trend line quite well. Almost a little bit of a triangle starting to form here as well. Obvious entry would be this 95 res. If I was getting aggressive, I'd probably even look at grabbing some on this break of 92. The volume certainly looks to be reducing every time on these sell-offs, so it looks to me like all the volume's on the up legs at the moment. So, but I'd like to see the same again. I'd like to see the volume kick in if it breaks here. Like I said, if I wanted to get aggressive, I'd probably take an early entry above 92. Stops below 90.5 there, so I'm only risking a couple of cents and plenty of upside. you could be more cautious and wait for 95 or 97, but then obviously your later entry, bigger downside depending on where your stop is, and obviously then if you're risking more, you need to take a smaller position. So I may well get aggressive with this and take an earlier entry and just see how we go and maybe play it off that trend line. Alright, that's 15 minutes or so. That'll do for today. Like I said, I'm going to try and do one of these every weekend, so at least you know there's one coming if there's still people interested. Otherwise, there's a few charts being posted up on the forum. Website's www.cfdtradersedge.com.au. There's a free membership and also a $45 annual membership, which just covers our costs for our live chat software and so on. We've got a community of 50 or 60 traders that chat live every day now, so it's a pretty vibrant place for short-term traders. Anyway, I'll catch you next weekend.